All right, 22 minutes left in today's session. Take a look at the indexes. We're down about 45 points on the Dow, off about 0.4% on the S&P, and little changed right now on the NASDAQ. Let's talk about something other than equities. Where is the value? Our next guest, John March, Chief Technical Analyst at Superior Gold Group, says it's in gold, and it's in the physical kind of gold. John joins us from Los Angeles. John, thanks for coming on.
Oh, it's a pleasure to be here, Matt.
Let me ask you first, we've been talking with a lot of people about the best ways to invest in gold lately. Some people are saying the miners offer the best opportunity. Why do you think physical gold is where the real value is?
Well, I'm basically a simple kind of guy. I like to have investments that if I kick them, it hurts my foot. And gold, physical gold, there's not too many ways you can mess that up. Anytime you get into gold stocks, there's a chance of a CEO making a mistake. Of course, we've never seen that lately. You've got a chance of a lot of problems with, like in South Africa, with labor, with power. To me, I want to have the gold in my hand, and I want to watch it grow, and it's done really well, even over the last 37 years compared to other markets.
Let me first tell you that I appreciate the sarcasm. And I want to ask you, listen, is there a concern about the currency? Because the dollar is looking pretty strong right now. Is an investment in gold right now, if you're very bullish on it, are you concerned about the future of the greenback?
Yeah, I am. Right now, gold is doing well, mainly on supply and demand, and that's why you see the dollar going up, because people still perceive strength there, but they go to the safety of gold. With all the money we're spending, I don't have any doubt whatsoever that we have inflation in our future. And if they keep stimulating until they see inflation, by the time that stimulus gets all the way through, we could see even possibly hyperinflation.
Yeah, well, I was just going to ask you, what do you expect? I mean, is hyperinflation defined as 20% or more, double digit? What do you expect?
Well, hyperinflation covers a whole multitude of sins. In Germany, after World War I, you saw hundreds and hundreds, thousands of percent inflation. I don't think we'll see that. But I think that if we're not careful, we could see 20, 30% inflation. But even getting close to that, even 10% inflation, and the drop in the price of the dollar will cause gold to go crazy. And I think that's why many banks are predicting that gold could reach $2,000 an ounce, not in the long term, but by the end of this year or next year.
Let me ask you about the best way to actually buy physical gold. I mean, how does the individual investor go out and do that? You can't really pick up gold bars on the street.
No, personally, what I have is a mix of gold eagles and a lot of mint-stated gold coins. And the reason I pick on mint-stated gold coins, and that's graded gold coins prior to 1933, is that they show the best return. Last year, gold was up 5%, which wasn't bad last year, but mint-stated gold was up over 20% last year, which means that it beat the stock indexes by over 50% last year.
Let me just quickly ask you, 10 seconds, where do you expect the price of gold at the end of the year, John?
I expect, I'm not as optimistic as 2,000, but I think we'll see $1,500, $1,600 by the end of this year, and I think we'll see silver maybe up a total of 50% for this year.
All right, John March from Superior Gold, thank you so much for joining us. Now, spring training has started, but so far one of baseball's biggest names doesn't know where to report. Why doesn't Manny Ramirez have a deal? That's coming up later on Money in Sports.